Do you think the tech rally in China is looking overdone at this point?
Yeah, I think that overall the starboard valuation rallies in tech companies mostly, I think for one reason is because of the overflow liquidities in the markets globally and in China. And I think that's one of the key reasons. Another reason is because of the trade war. Actually, trade war has been, increase the demand, domestic demand, and shift to domestic tech companies. A lot of the tech companies in China have been offered to join the domestic supply chain, which they have never been able to do so in the past. So, and some of the companies, leading companies in the tech sectors we're looking to right now evaluate around 150 million to 200 million, which is relatively quite smaller size. However, because of the demands and also valuation has not reflected in the company right now. And also because of the starboard, the exit is much easier right now. So those companies will be able to go IPO within 1 or 2 years. And so that's one of the reasons we believe that this year has been a very good year for us, especially for the private equity market in tech companies, core tech companies.
And Ashley, you touched on the trade tensions. Of course, ByteDance and TikTok and the conversation is about what's going to happen with that app are dominating the news flow at the moment. Just broadly, what do you think this latest set of actions from the US is likely to do in terms of the impact on China's tech scene? Do you think it's going to trigger any significant changes or just accelerate themes that are already underway here?
Well, I think that it's probably good for us good for tech companies in the longer term. In the past, it's more about globalization, and so people are comparing who can make a cheaper stuff and who can make a better stuff. And so that we buy them from the global arena. But right now, I think it's more about decoupling environment. So every country, not only in China, people are looking to compete its supply chain. So I think in the longer run, it's probably good for tech companies. It encourage the startup companies to invest in more in the R&D and also encourage the government to give out better supportive policies. I mean, definitely it's
Actually,
hard.
David here. What about in terms of fundraising? I wanted to pick up on fundraising, if you don't mind. Yeah, because you mentioned earlier investing has been good, but what about that and how that's being affected?
Yes, totally. It's very hard. It's very challenging year for fundraising. We believe that it's the best time for investment, but worst time for fundraising, especially for our US dollar fundraising. The international travel restriction seems that disabled people to travel around and to do the due diligence, on-site due diligence. So a lot of international investors has not been able to do a new investment for the funds. A lot of them are doing follow-on investments. So it's hard, really hard to raise a new fund for our US dollar funds. But for R&D fund, it's better, comparatively easier, but still challenging. So we are raising our fourth fund, R&D funds, core tech funds. It's supposed to be end in June 30th. But now, because of the travel restriction in Beijing, so we postponed for 1 month and about to close by the end of this month. But overall, it's really hard. It's much harder than last year.
Well, at least things hopefully can just get better from here. I wanted to then take it back to, I guess, the public markets and what that's doing as far as the sort of the timetable for exits. Have you noticed between you and your portfolio companies or your peers and their own portfolio companies any interest and any pickup, if you will, in terms of bringing those exits forward because the market's very hot right now?
Mm-hmm. Well, I think right now the exit prospect looks great, especially the determination of to reform the exchange board in starboard and second main board has been quite clear. So everybody, startup companies and funds are encouraged our portfolio companies to exit as soon as possible. So I think that's something that everybody has been looking at too. We have around 7 companies about to be listed in Starboard this year. About another 7 to 8 companies will be listed next year. So majority of our existing portfolio will be go IPO in next 1 year or 2 years. Like, I think
actually, just a last question. You talk about the supply chains. You talk about the supply chain shifting from Western suppliers to domestic suppliers here in China. What part of the economy is seeing the most dramatic change when it comes to supply chains?
Well, I think the supply chains definitely one thing is about semiconductor sectors. Like in the past, the semiconductor sectors is a market which winner takes all. So usually number 1 takes majority of markets, and number 2 or 3 very slice market, and then the rest of people gets nothing. But right now, because of the decoupling environment and new policy, so a lot of companies are right now have been being pushed to select a backup suppliers in China. So even though the suppliers right now, the technology has not been upgraded, not advanced, but that's probably the best. They will pick the best option they can get in the markets. And for those companies, once they get into supply chain, then they have opportunity to get upgraded, with the company, with the buyers. So I think that's very key for semiconductor sectors. Once you get upgraded, you get opportunity to, generation after generation upgrading, then you can have a chance to be better and better. So for that, I think we can see investment opportunity in. Yeah, that's why this year we have been, investing in multiple semiconductor sector companies.